Hello and welcome. Thank you for joining me to discuss how the new accounting standards and audit limits could affect the businesses you support and how we at Fortis can help from an audit and assurance perspective. My plan for today is to tell you a bit about me and about Fortis, give an update on the changes to the audit limits and then how they interact with the upcoming changes to FRS 102, how we could work with you, an introduction to our team, our process, how our fees are set, and then I'll share my details should you have any follow-up questions. On the introductions, I'll start with me. I'm Frances Howard. I'm Head of Audit at Fortis. I trained and qualified as a chartered accountant at a top 10 firm and have worked with a couple of smaller firms since then, before joining Fortis about 18 months ago. I've got about 20 years experience in audit, primarily with owner-managed businesses and not-for-profit. Moving on to a little bit about Fortis, we have a team of over 100. Within that, we have a team where we have dedicated audit staff, so they are very experienced at what they do. The audit team is spread across our York, Scarborough and Leeds offices, but we do work with businesses across the country. We're happy to travel, work remotely, or a mixture of the two, depending upon your client's needs. Our experience is quite broad. We have charity clients where income is only 250,000, and we have groups of companies where turnover is in excess of 100 million, and everything in between. I've included on this slide a few of the sectors that we deal with. In particular, charities, pension schemes, and international standards require specialist knowledge of that legislation, and we have specially trained people that deal with those types of entities. The services that we offer are wider than you might expect. Our main service is, of course, statutory audit, but we also have experience in providing SRA reports, independent examinations for charities, accountants reports for the FCA, grant audit opinions, and then we can also support with internal audit, reviewing internal controls and bespoke reports over particular areas in the financial statements if that's something your client requires. This slide covers what I feel sets us apart from other audit teams. In particular, we're available all year. If there's some question over treatment at some point in the year, we can discuss it there and then, making sure that financial reporting internally or to external funders is accurate and there is not changes to explain later. We'll fix our fees for 3 years, subject to inflation, so we don't come in year one with a low fee and then double it next year. And we commit as far as we possibly can to staff consistency. We make sure at least one team member remains the same, which means we retain knowledge of your client and reduce the time your client needs to invest in the audit. So, audit update. You may be aware that there's been talk for a while about small company limits changing and therefore audit limits changing. That's finally now been enacted for periods commencing 6th of April 2025 onwards. Because it's periods commencing, that does mean that March year ends are stuck with an audit for March 2026 because their period will commence on the 1st of April 2025. The next couple of slides are the same as I use for our internal accounts team. I'm sure you'll be familiar with how it works, but generally, if a client is under 2 of these, they can claim the audit exemption, otherwise they can't. There is the 2-year rule for both in and out, so you need to be under 2 for 2 years to claim the exemption and over 2 for 2 years to no longer be eligible. Remember, of course, that any shareholder with 10% or more of the shares can require an audit, and we do have some clients where this is the case. Also, where the company is a member of a group, the group, not just the company, needs to be small to be exempt from audit. These are the new group limits, net being after consolidation adjustments and gross being before consolidation adjustments. And just a flag on this, because it does cause some confusion, the limits do apply to the whole worldwide group and not just the UK entities within the group. I quickly cover audit limits for some other entities as well. Charities limits at this stage at least have not changed. So if income's over 1 million or if income's over 250,000 and assets are over 3.26 million, the charity would require an audit. There's no 2-year rule. So first year that they're over, an audit's needed. Pensions can be quite a lot more complicated. Generally, an audit's required unless they're exempt. The most common reasons for exemption is every member is also a trustee or the scheme's fully insured. That then brings me to the amendments to FRS 102. These are effective for periods commencing the 1st of January 2026. I'm sure everybody's done their CPD, so I don't intend to do a full update on these. I just want to talk about how they might affect the company size and therefore audit exemption. Revenue recognition will move to the 5-step model, which is much more in line with IFRS. So we identify the contract, identify the obligations of that contract, determine the transaction price, allocate that transaction price, and then recognise the revenue when or as the obligations are satisfied. It could mean that there's no effect to how your client recognises turnover, or it could mean that turnover is recognised earlier or later than it has been in the past. I think it's very worth being aware of what the likely impact for your clients is now, especially where they're hovering around the new audit limits and they may or may not be in audit. The second one is on-balance sheet leases. Operating leases have previously gone through P&L pretty much as payments are made. In the future, we will need to treat them like finance leases, so capitalise the asset, recognise the liability for the present value of future payments, unwind that for interest each year, and depreciate the asset. Other than the interest, this will have little effect on net assets, but for companies with a lot of property or plant and machinery on lease, the asset values could mean the gross asset limit is breached where it wouldn't have been otherwise. I'd advise looking at this early so that your client's prepared if it will bring them out of the small companies regime and into audit. If you think you may have clients who require audit and assurance services, we would be very happy to work with you and with them. I'm very aware that Fortis as a business offers some services that will cross over with your own, so I wanted to make it clear that we would work with you on a non-compete basis. We would provide and offer only the audit and assurance service. We do work with a few other accountancy firms. You can be as involved or not as you wish, but we generally find it best that you and I work closely together and create a streamlined and hassle-free process for the client. I always think it's nice to see who you'll be working with. I don't want to go through everyone, but we have a mixture of ACA and ACCA qualified staff and ACCA and ACA trainees. In terms of what to expect from our process, we would generally meet with the client pre-year end to discuss any issues that may have arisen during the year, make sure that we have a plan to make sure that we then meet deadlines. You are very welcome to be involved in this process or not. As I said, it's entirely up to you. You'll then prepare the accounts and let us have this for the audit at the agreed time. We have our audit planning phase where we look at systems, perform our risk assessment and decide what testing we will do. We have a field work phase, which is the general ticking phase where we will be on-site or remote, depending upon what your client wants. If we are remote, we use a system called Inflow to transfer data, which is secure and fully compliant with GDPR. And then we have a completion phase where we discuss our findings with the client. Again, you're welcome to be involved at that stage and we can update beforehand if necessary too. Our fees, I've already mentioned, but just to confirm that they are on a fixed basis for the agreed work. They're always agreed in advance and increases are limited to RPI unless the scope of the work changes. Finally, the last slide has nothing to do with audit, but I can't do a webinar without shouting about the Fortis Foundation. The foundation encourages businesses to commit 1% of their profits to then be given out in grants to local charities and community groups. If you would like more information on the foundation, I can put you in touch with our head of foundation, Matty Lewis. Finally, if you do have any questions or if you would like to work with us or even just meet up to talk about working with us, please let me know. My details are on the screen. I look forward to hearing from you.